Hi everyone, I thought of a structure of my update videos, which I hope you will like, so please let me know in the comments. But what I like to do is start with the high time frame preferred and then an alternative count, following that up with the medium time frame preferred and alternative count, and then ending the video with the lower time frame preferred and alternative count. And I will always show you the invalidation for each of these counts. So let's start with the high time frame preferred scenario that you see right now, where I'm looking for an A, B, C, this yellow C ending over here in a common wave C target, which is also then the end of this wave B, which then follows to the downside to finish this wave C. And if we look more closely, I'm looking at this green count, which is a 1, 2, a 3, then an expanded flat 4, which is the most common correction in a wave 4, and then following that up with a wave 5 to the upside, which would then end in the common wave C target, which also has great confluence with this red zone over here, which used to be support in the past, but could now be a very nice resistance area to then move down for wave C. Now, in my opinion, this wave or this scenario is invalidated once we take, well, actually, once we get in the area of wave 1. Once we get to, let's say, 18.3k, it's invalidated, and actually on paper it should be invalidated the moment you go below the 0.5, because a wave 4 tends to not go below the 0.5 Fibonacci. So that being said, another alternative count I have, which is a bullish one in this case, might be some sort of an ending diagonal, which I want to highlight this. It is an alternative count. This is definitely not my preferred scenario. It's just something I have on my chart, and you know, I just have it here just in case. My, let's say, more bearish count is not that we have an A, B, C, but that we move down immediately in the upcoming days to then finish the green 4 in this area and then move up for 5. So as you can see, I still think wave 5 is yet to come, and we're not finished yet with this wave C. It's just the one goes down, the other one goes up. Now this count is invalidated the moment we take the highs over here. That is when my preferred scenario is going to be active. So, and actually with my preferred scenario, if we move to the upside and we just shoot through the Fibonacci retracements over here, or the fibs that you see on the chart, so these ones, the 1.38 and the 1.236, the moment we go through it and immediately move to the upside and not actually have some sort of resistance and then moving down, then of course this locally is also invalidated. Now let's go to the more local time frame, where I have two scenarios mainly. The first one is this WXY-XZ. WXY, oh sorry, this is the WXY. Now this count is a count which would be invalidated the moment we take the low here at 21.4k, and this count would fit nicely in the higher time frame count that we have, because if wave Y is indeed in, we can now move up in 3 waves for this wave B before then moving to the downside in wave C. The alternative count that I have is that this is a WXY-XZ, so that it takes a little bit longer for the correction to finish before then again moving to the upside for wave B to finish wave B and then down for wave C. Again, this, the invalidation of this scenario is taking the lows here. So both of the local time frame, or at least the medium time frame scenarios I have, are both pointing to the upside. I don't really have a bearish scenario, and the reason for that is that we took this high over here, which then shows me that this whole structure is a corrective structure and not an impulsive structure to the downside, like an impulse, because then if this is a wave 1 and then this would be a wave 2, wave 2 is not allowed to take the high of wave 1, and that is what happened over here. So yeah, I do expect more upside. Now going to the lower time frames then, and actually move to the 15-minute, I'm currently thinking the following. I have a bullish count, which is that this is a 1, 2, and then we have 3, 4, 5 yet to come. And then this might be another 1, 2 of a wave 3. And I will show you in more detail what I'm thinking, because actually I've been thinking about this. So let me put a couple of things on, not the news line, there we go. So what I've done is let's go to the 1 hour, because this is relevant again for the higher time frame count as well. So what I have done is, okay, if wave B is going to be a 3-wave structure, which it should be, it's either a, a 5-wave 5, for example, like a zigzag, which looks likely following the lower time frame count. If this is going to be a 5-3-5 structure, a zigzag in wave B, it needs 3 waves. Now a zigzag has a 1-to-1 target, and you can see on this yellow line over here, you see the 1-to-1 extension. So I've basically been thinking ahead of, okay, how high does price need to go in order to then retrace to a certain level, which then leads to the 1-on-1 target of this 5-3-5 getting into this area. So the 1-to-1 Fibonacci or trend-based fib extension over here needs to end somewhere in this area, which is the target for wave B. So based on this, I was thinking, okay, it would be best if on the lower time frame, wave 3 is going to be extended. So then we have a blue 1, a blue 2, then a blue 3, a blue 4, and then a blue 5, hitting this target box that you can see over here, which would be around 24.7K, this area. So then this blue 5 would go over there. Then we get a correction, a 3-wave correction, which can be anything, but let's say it's something like this. And then we would be backtesting this target box, which also, by the way, this white line is the 382 Fibonacci, and this is the 786. Let me put the levels on here. So the 786 is taken from the beginning of this corrective move. So from the beginning to the end here of A, and the 382 is basically taken from the low here of A to where wave 5 would end. And then the 382 would be a nice target for the wave B retracement. So then we have a zigzag A followed by a 3-wave move to the downside hitting the 382. The 382 for a retracement in a zigzag is the minimum target. So it would be nice then to hit this 382, which is also supporting this target box, before then moving up for wave B. So this is my current thought, which is actually like the low time frame is now connected to the higher time frame count I have, which is, I think, pretty cool, like how low time frame we're working here. But we are thinking ahead. We're thinking again. We're trying to get the scenarios folding in front of us. We're trying to think ahead and think, okay, what might happen? How high can price go in order to be valid for the higher time frame Elliott wave count? So in this case, what I am looking for locally bullish wise is that this is then is a wave 1, 2, and then this is another 1, another 2, and then a 3, 4, 5 to the upside. So then we go up for a 3, a 4, and a 5, wherever that goes. It just goes up. Then we correct with 4 before then moving up for 5. Now, very, very, very locally, we could already maybe find our way now to the upside, or maybe go down once more. You do see I have a little bit of a support area here, but also the golden pocket area, which is the 618 and 66 Fibonacci, these two. It's very well respected, as you can see, which is a very nice target as well for a wave 2. So I wouldn't mind price to move up, but just as you know, like you never know, we might go up, take a few of these highs, then move down, take the double low that we created over here, because there's 2 lows now, take the low and then move up. That being said, the bearish scenario that I have on the lower time frame, let me remove a couple of these things. The bearish scenario, oh, by the way, the bullish scenario is invalidated, like the 1, 2, 1, 2 is invalidated the moment we take this low over here. If price moves down and takes this low, then this cannot be a wave 1, 2 anymore in the extended 3. And this whole 1, 2, 1, 2 is invalidated if we take this low. So this 1, 2, and then 3, 4, 5 is invalidated if we go below this low, for sure. So a bearish potential scenario would be that this is a wave A, B, and a C, which is a corrective structure, which then needs to follow up with either an impulsive move down or another corrective structure, another 3-wave down. And then somehow this needs to be either, no, it can't be a C wave because that is a 5-wave. It's just maybe like like as you can see, a 3-wave over here followed by a 3-wave, maybe another 5-wave. that would be my bullish or bearish, more bearish scenario, because then the targets are not going to be as high as this being a 1-2-1-2. So yeah, that is yeah, these are my current thoughts on the high time frame, the lower time frame, the medium time frame. If you want to have more details, by the way, on how I got to the higher time frame preferred scenario, if you want to know how I eventually got to this specific scenario, check out the card at the right top of your screen right now, because that is a video where I go through the whole count in very much detail. So I hope you enjoyed that one. But for now, I hope you enjoyed this video where I try to implement my new structure, the new idea I have for my update videos. It takes a little bit of practice, not gonna lie, to really think about showing you also the invalidations and the bullish and bearish counts. And of course, before recording this video and actually making it to the end, I had a couple of, let's say, practice runs, but I'm trying my best. So please let me know in the comment section if you enjoy this setup, and I will make sure to put timestamps in my video as well, so you can immediately go where you want to be. If you want to know low time frame stuff, you can immediately go to the low time frame stuff. So that being said, thanks for watching this video. Tonight at 7 p.m. another video. You might not get a reminder because I might have posted too many videos in 24 hours, but just go to my channel if you want to see the video at 7 p.m. tonight. Thanks for watching this video, and I hope to see you at the next one. Bye bye.